Hey everyone, welcome. This is Matthew from the Daily Trade. So today we're going to be talking about the actual proper way to execute your orders and get them through faster and save you money, because eventually you're going to lose money if you don't execute your orders fast enough and you don't do it properly. So right here we're in Tastyworks, and I'll show you Robinhood real quick after this. But to see it easily on here, we're going to go ahead and show you how to properly execute your orders and make sure that they go out faster. So on Tastyworks, you can see it easy. So let's say you're with your call and your put options. And if you're expecting, if you had a call and you wanted to buy a call because you're expecting the ticker SPY to go up, you want to get in. Instead of paying what they usually price you at is the mid price, which is right here at 172. You don't want to get in at that. You want to get in to execute it faster as it's climbing. As the option prices are climbing, you're going to be getting stuck with not even getting your trade in because you got in at what the middle is. You don't want the middle if your contracts are going up. You want to get one up, two up, and the more and the higher you go, the faster it's gonna be. But you don't want to go all the way farther than you really need to. You just want to make sure that you get it executed. So putting it about one or two usually gets you about faster. And selling it is the totally opposite. If you want to sell it, let's say I want to sell this. I want to sell it not over here. That's way too low. You're basically going to lose your money, your profit. So, and depending on how many contracts you hold, you're going to be losing even more money. So you want to just put it not at the mid. You want to just put it maybe one or two less than what it actually is. So when usually you're looking at your profits, you're going to be seeing maybe, oh, I'm up $10 on this contract. Well, if you think about it, when you sell, you're going to want to probably sell for $1 less or $2 less. So if you think about it, you'll be $8 or $9 in profit. You don't want to be selling it right at what it is. You want to make sure that you get out faster and quicker so that you can secure your profits and take those gains home. So let me show you a tutorial real quick on Robinhood so it makes it a little bit easier on some people. All right. So here it is. I got my Robinhood up. So this one, you're going to go, it's a little bit different because they don't show you everything as Tastyworks does all at once. So you would do the same thing. What we had the 121.5 we were looking at for the calls. And we'll go here. And then when you're entering it and you're selling it, you would want to, so this is buying it, but obviously I don't have a contract open, so I can't really do anything for it. But if you want to sell it, you're going to want to not enter what they give you right here, because Robinhood defaults at the mid, and you don't want that mid. You want to make sure that, let's say you're buying or selling. So if I'm buying this call, I'm going to want to buy it at $1.47 or 46. 147 and 146. I don't want that mid price of 145. That's going to make my contract stay there, and I'm not going to probably get in. And on most trades, you probably won't get in when you want to, because you're going to find that you're pretty much holding off on your contract even getting in. And it sucks for most people as they say, oh, my contract didn't fill. My contract didn't fill. And why is that? Oh, well, because you didn't follow directions and actually get in higher or lower than what you were intending to do. And that's why making sure that you do the non-mid, you want to make sure that you get in closer to the bid or the ask, depending on what you're doing. And that's why this is essential, and you should know this before actually entering a trade, because then you're going to get stuck in a situation you probably won't be able to get out of. And that is that for Robinhood, and it's very complicated when it comes down to you finding out that the contract you wanted, it ends up moving up maybe $10 in value and you just executed, I mean, you just placed the order and it went up $10 in value. Well, you probably could have gone in, but you weren't asking a higher amount or a lower amount. So this is where it really gets into the actual trader having a mistake, and you just have to learn from it because everyone does go through that, and you just have to make sure before you execute your trade, you want to make sure everything you see, like your contracts, your limit price, you want to make sure everything's ready to go and not just you're doing quick trades, because sometimes quick trades can actually throw you off. So making sure that you have a very very easy way to execute your orders and safely is going to make you profitable, and it's going to keep you away from losing money. So thank you for watching, and be sure to click the link in the bio if you are interested in trading with the Daily Trade, or in the description below. So thank you, everyone. All right, bye-bye.